right, welcome back to the Tech Corner. I'm George Tsilis, Senior Markets Contributor here with the Schwab Network. On this week's Tech Corner, we're going to be covering technology gaming company DraftKings. Now, DraftKings Incorporated is a digital sports entertainment and gaming company that operates primarily in the United States, but does have an international presence as well. The company offers a wide range of products, including online sports betting, daily fantasy sports, iGaming, which are basically online casino games, and digital lottery courier services. Its offerings are accessible via its website, mobile applications, as well as retail sportsbooks. The company leverages its technology platform, the scale and density of its user base, and insights from over 4 million users to continually improve its analytics, marketing, and technology. The company currently operates in 38 U.S. states and has expanded into international markets such as Ontario, Canada. Now, DraftKings faces competition from several key players in the online sports betting, iGaming, as well as the traditional casino betting markets. Now, notable competitors include Flutter Entertainment, symbol FLUT, which is essentially the parent company of FanDuel, Penn Entertainment with its ESPN Bet Sportsbook, and MGM Resorts International with BetMGM. The company also competes with Caesars Entertainment Group as well. Now, when it comes to unique value, DraftKings distinguishes itself with a robust technology platform that integrates sports betting, iGaming, and daily fantasy sports under a single account. The company also leverages data science and machine learning to optimize user engagement and monetize across its platforms. Strategic partnerships also make a difference. For instance, it has strategic partnerships with major sports leagues such as the NFL, as well as media companies like Amazon, which help enhance its brand visibility and user engagement. The company also focuses heavily on regulatory compliance and responsible gaming to further strengthen its market position. Now, in recent news, going back to August 6th of this year, the company reported its Q2 2025 fiscal earnings and sales. The company earned around 38 cents on an adjusted basis, beating the estimates, which were around 22 cents in the same period last year. Revenue also rose 37% year over year to $1.51 billion, above the consensus estimate of $1.42 billion, despite posting only a moderate increase in monthly unique player increases to 3.3 million. Revenue was actually helped because of the acquisition of additional customers, an increase in the sportsbook hold, which essentially means the amount of wagers kept by DraftKings, as well as improved customer engagement. More importantly, adjusted EBITDA actually increased over $300 million compared to the $128 million for the same quarter last year. The adjusted EBITDA margin also increased to 20% of sales, above the consensus estimates by about 3%, which were 17% total. Now, there are many positives to consider with DraftKings. Like I said earlier, as of this month, 38 states, including Washington, D.C., offer some form of legal sports betting. California and Texas, which are large markets, are still holdouts, but they have huge potential. The company is also expected to achieve adjusted profitability by the end of this year, 2025. This is driven by disciplined cost management and a strong growth outlook in the sports betting market. Over time, the company's strategic acquisitions and focus on live betting innovations positions it well for future growth, with projections of up to $850 million of free cash flow for 2025. The company also maintains an early mover position as a pure player in the nation and rapidly growing market for online sports betting and iGaming in the United States and Canada. Lastly, DraftKings showcases impressive growth. With forward revenue expectations of 27%, this is significantly outpacing on an expected basis the sector average around 3%. This also indicates very robust expansion trajectory in sales and potentially for earnings. Now, despite many positives, we also have to address some of the concerns as always. DraftKings always faces regulatory risks, particularly in California, where potential changes in legislation could impact its operation and market expansion. The company has experienced slower customer growth and plateauing of active user numbers. This raises concerns about its ability to sustain that long-term growth that I mentioned earlier. There's also competition that I didn't mention. Growing interest in prediction markets from Polymarket and companies like Kalshi may be a contributing factor to future active user numbers. Recent tax hikes in states like Illinois pose a financial challenge as well, potentially impacting DraftKings' adjusted EBITDA and setting a precedent for other states to follow suit. And lastly, for the concerns, DraftKings also faces profitability challenges. With a net income margin of negative 6%, this is lower than the sector average of positive 4%. These comparisons reflect ongoing difficulties in converting sales into actual profits. Now, when looking at the technical picture for DraftKings, first off, the current technical condition is strong, and the chart pattern suggests upward momentum may continue. With a one-year price performance of 42%, far exceeding the broad market of about 16.5%, this highlights bullish sentiment and investor confidence in DraftKings. Now, using the MACD as an intermediate term trend indicator, it is bullish at this time. An upside intermediate momentum as measured by the RSI indicator is positive above 50. However, the stock may be in a short-term overbought condition when we actually look at the slow stochastic reading of 80 or higher. Now, from a moving average standpoint, the stock is trading above its 50-day moving average, and it's also trading above its 200-day moving average, which is pointing up, indicating that the intermediate term trend is still bullish despite that potential short-term weakness I mentioned. This validates the overall strong technical conditions for DraftKings. Now, in summary, DraftKings over time has benefited from growth opportunities at the intersection of digital sports, entertainment, and gaming. Brought together by its fantasy sports technology platform, which powers millions of contests entries in peer-to-peer competitions every week, the company holds a significant market share in the United States sports betting industry. Now, with this strong market position and trusted brand recognition, the company stands to benefit from ongoing legalization of gaming and expansion opportunities across new states in the years to come. That's it for this week's edition of the Tech Corner on DraftKings. Please join us next week, where we're going to be highlighting semiconductor giant Broadcom's fiscal Q3 earnings, which have posted this week. Thanks for joining us on this week's edition once again of the Tech Corner. Please like and subscribe to the Schwab Network. I'm George Tsilis. We'll see you next week.